Thank you, Dave. I'm filling in for my good friend Vince. These are big shoes to fill, but I'm going to try my best. Vince was supposed to be here, but I think he's come down with the flu. So here we are. I'm going to talk a little bit about the velocity system and what we offer here at TradingWins. For those of you that don't know me, that's me. I'm going to talk about that momentarily. But as Dave mentioned, if you've been trading for any longer than a day, you know that losses in this business are inevitable. And what we're doing here is not giving financial advice. We're technical analysis experts, and we're showing you what we're doing. Before taking on any trades, please consult with your financial advisor who knows your situation a whole lot better than some guy on the internet. Please speak with him or her before you make any investing decisions at all. Having said that, that's me, creator of the velocity system. Just a little bit of background. I know I've got only about 37 minutes left, so we're going to go through this quickly. I want to spend most of my time on the charts and really give you something that you can take away with you without having to buy anything. My background, I'm a CPA. When I left school in 1998, I graduated from university, joined a big, well, actually back then it was Big Six. Now it's Big Four, one of the Big Six accounting firms at the time, and went right into the audit field, which was great because it allowed me to go into businesses and see what the businesses were all about, what made them tick, what the financial statements said, how the financial statements were constructed. And I started reading The Intelligent Investor at the time and thought that fundamental analysis was the way to go. I'm not saying that it's not the way to go. It certainly has a place, but it's not the place where I generally start my research, and it's certainly not the place which dictates all my decisions in the market. I start with the technical side of things, then I'll look at the fundamentals, then I'll look at the overall markets and make a decision on what strategy I want to employ for a specific trade. So having said that, let's start with the headline. How have we been doing this year? And this is a trade journal that we post for all our members, and it's on our Microsoft Teams community. We tried Discord. It was just too complicated for our members. Our members are generally older. So if I were to describe our group to you, it's people generally older than 40, have money to invest, and genuinely have a desire to learn. And that's what we're preaching here. We want to teach you how to do this with your own risk tolerance and with your own comfort level in mind. And I learned this about 20 years ago that day trading just wasn't for me. I tried it because who wouldn't want to make 10% in a day? Because if you annualize that over the course of a year, it's, Warren Buffett's got nothing on you at that point. But I found that just as quickly as you can make 10%, you can also lose 10% and 20% and so on and so on. And as I've gotten older and my situation in life has changed where I have children, older parents, I can't be stuck to a screen all day. So for me, the swing trading environment of being in a trade for a couple of days to a couple of weeks is just the right sweet spot. But having said that, what I'm going to show you today, you can certainly employ on any time frame that you want, from weekly down to a 1 minute. I don't generally recommend 1 minute. It's just a little too choppy for the technical side of things. But I do want to make one distinction. In the last 15 years or so, especially in the last 5 years or so, the market is no longer just about longs and shorts, buying and selling. The market is now, because of all of the different instruments that are available out there, everything from leverage funds to inverse leverage funds, futures, options. The market is now more about assessing a probability distribution. So this may, if you're not mathematically inclined, don't worry about it. There's not gonna be any math on this talk. But what you want to look at is not only do you want to go long or short in the market, but where will a stock land? Where will a stock go down to? Not only that, but what's the best strategy? Am I looking at a leverage fund? Am I looking at an option? Am I looking at an option strategy? Now, I know Larry before me, I just caught the tail end of his presentation, and he made such a great point in saying that Why buy the stock when you can do a synthetic? And when we bring that up to people, it's an eye-opening kind of a situation for them, because instead of putting down 100 times $325 on a Google stock, you can simply buy a call short a put, and you can get the same 100 delta, or just about the same 100 delta that you would if you bought the shares. So it's these kind of strategies that we teach to our group. So let me just go through some of our wins this year. We didn't have a loss until July 1st of this year. And you can see when the market started to get choppy, we had a few ins and outs here. And you can see we had many 100% plus gainers. And if you're like me and skeptical of these results and say, how do we know you just didn't make up the sheet? Well, all of this is documented here. So in our trade ideas spreadsheet, our Teams channel, you can see we timestamp all of these things, or we talk about them in the market chat and then mention them here. So this is a perfect example. On the 12th of November, we scaled out half of our 45.55 call debit spread on SLV. So if we go here, November 12th, there's a 45.55 call debit spread that we scaled out of for 96% profit. So this is all listed. All the openings are listed. All the adjustments are listed. All the closing trades are listed here. So if you'd like a copy of this sheet, you can send us an email or put a link in, or put a note in the chat, and Dave will let me know, and we can send a copy of this spreadsheet out to you. So a point here on the spreadsheet, you can see a lot of these. So QQQ5, and if we go over to our TradingView platform here, so QQQ5 is a leverage 5x NASDAQ fund that's listed on the London Stock Exchange, okay? And if you look at when we started accumulating it, this was right after Liberation Day, around the 10th of April or so, Liberation Day being the 2nd, market starts to drop. And the goal here was really to accumulate more. So the price on these QQQ5 shares, I think high of these shares was around $5. When it got down to about 41 cents or so, this was not a bet on this particular stock. This was a bet on the American tech market. And I said, if the American tech market melts down, we've got much bigger problems than my shares on QQQ5. So we started accumulating here with the goal that if it goes down further, we're going to average down. It never actually went down further. It seems like our entry here on the 10th of April was almost at the very, very low. There was the 10th of April, right around here. So 10th of April or so. And our net cost got down to about 50 or 60 cents or so. And we took off from there. We did the same on Mag 7. I'm going to explain what all of this is on the chart in a moment. So I wanted to start with the headline here. You can see all of these gains, and again, you can screenshot it or you can request a copy of this. We're happy to send it to you. Our goal is to be as transparent as possible. Being a former auditor, these are exactly the kind of questions that I would ask. How do we know this is legitimate? How do we know you just didn't make up these numbers? We're happy to show you how these things actually ended up on the spreadsheet here. So going back to my personal account here, these are screenshots from my personal account on Interactive Brokers. You can see August 13th, 50% year to date, September 19th or September 13th, hard to see here on the screen, 85%, 92% a little bit later in September, finally hit 100% on the 29th of October. And as of the 28th, when I last took a screenshot here, 79%. I think it's a little higher now. But you can see leverage funds, I'm doing about 5 times what the NASDAQ is doing, but when there's a pullback, the knife does cut both ways. So be mindful of that if you're trading some of these leverage funds. You know that you need a system. What we're saying is you don't need a system that is going to be as good or better than what JP Morgan or Goldman Sachs said. That's just not going to happen. They have computing power that's much greater than what you would have as a retail trader. They have PhDs and rocket scientists that are working there, and it's going to be very hard to compete with them. What we want is we want a small edge, similar to what a blackjack card counter has. We want a small edge that we can exploit over and over again. We want to take that small edge, and then we want to apply it to a trading strategy that's appropriate for that situation. Okay, I'll say that again. We want to take that small edge and we want to apply it to a trading strategy that's appropriate for that situation. It's no longer a long or a short buy or sell market. You've got to look at what's available and then make a decision based on that. The system that we've designed is really designed for longer term trading. Now, there are trades that we've been in since 2023 and there's no reason to get out. And I'm going to show you the system that we're using. I'm going to show you where the stop losses are. I'm going to show you where the take profit levels are. And I'm going to show you that we're trying to make this as mechanical as possible. I find that in the students that I've coached over the last 10 years or so, the problem isn't intelligence. The problem is being able to tolerate pain. That's what makes a better trader. So when you get a stock that goes against you and you know you've hit your stop loss because as a prudent trader, you made a plan for this before you got in. When it hits a stop loss and you say, you know what, I think it's going to bounce because I don't want to feel the pain of taking a loss. When you get into that situation, you're doomed. And that's the biggest change that we've seen in traders that go from being successful to somewhat successful. Let me start again. They go from being unsuccessful to somewhat successful to successful, is that consistency. And that's what we're trying to preach, and that's what we're trying to show you. And the way to get to that consistency is to make things as mechanical as possible. You put notifications on. If a certain price level is hit, you're out. If a certain price level is hit, you're scaling out. If a certain price level is hit, the entire position is closed. Because when you're looking at a chart, and it's intoxicating. So when you're looking at something like this, and if we move to, let's go to something that's moving today. So this is Poet. And if we move to a 5-minute chart, you can see just the movements on this, and you think, oh, geez, you know, if I just gotten in here, look at how much money I would have made. If I'd just gotten short here, look at how much money I would have made in 25 minutes, 30 minutes. Don't do that. Try to get a system that is as mechanical as you can make it. I'm going to show you the one that we use. You don't have to use it, but the basic concepts are the same. Okay. So the system that we've designed is the velocity system. So really what it is we programmed some indicators to paint a ribbon. And when the ribbon is green, you're in an uptrend. When the ribbon is red, you're in a downtrend. And you see these short and long notations. Okay. And the system is very, very simple. Now, there's a couple things on here. This green line here, the one that is not all together. So this goes from red to green. This is basically a 3 ATR chandelier exit. Okay, so if you want that, I can put a note in the chat and we can let you know exactly what it is. So let me take off. This is a 20-day simple moving average, and I'm going to remove that because we don't need it for the time being. I'm going to move to a daily chart, and I'm going to move to the NASDAQ. Okay, so you can see the overall market here. These are trend lines we've drawn as we were doing an analysis for our group. This trend line was drawn here on Wednesday last week, and we hypothesized that if we get a breakout here, that the next level up would be this level here, which got hit, I believe, yesterday. That's about to get hit today, and it's close enough. But let me take you back. As I was mentioning, sometimes you can be in these trades for months, if not years. So our long signal comes on the NASDAQ, and we're going to use the Qs as the proxy for the NASDAQ. Our long signal comes on this bar on the 9th of May this year. Okay, so you can see we hit a bottom around here on the 7th of April. This is when we started buying our QQQ5, the leverage fund. And the leverage fund does really well when you get a move like this. It does really poorly when you get this kind of situation here because of the volatility drag and volatility decay. So our signal comes on the 9th of April here. Do I take that? And my answer to you is maybe. And you say, Rahul, but it's very clear. It's a long, it's done really well. Yes, in hindsight, it's perfect. I want to make one other assessment before I take this trade. And that assessment is, am I breaking a previous clearly defined pivot high that is above the ribbon in the direction of the trade? Okay. Entry. Confirmation is I have to break a previous pivot high in the direction of the trade. And that previous pivot high comes right there around the 19th of Feb. So our entry on the 9th of May on the close, and these are, we're going to only be talking about bar closes, not intraday highs or lows. Our close that day is 487.97. Our previous high comes in around 541. As an aggressive trader, I may open a quarter or a half position here. What I don't want is to get chopped around. On ETFs, it's a little bit smoother. On individual names, there can be a lot of chop. So remember, as a background that I have as a CPA, the first thing they teach you in accounting school or in your professional courses is this concept of conservatism. If something is more likely to happen, you're going to defer to that. So in this case here, I want to wait. I want to make sure that this is actually a proper breakout and that we're actually going up from here and that we're not just going to bounce around like we did, for example, here. Okay, and I'll address this situation in a moment. So I put this on my watch list and I mark this level. I go on the right side here of TradingView and I just set an alert at that level. When that level gets breached, my phone goes off and I now have a decision to make here. So let's say we have an intraday break here on the 25th of June, but we have a very clearly defined break above the previous pivot high on the 26th of June here at a close of 546.22. Now, I take this trade, but where do I put my stop loss before we get into what the right strategy is? So if I take this trade at 546.22, I want my stop loss to be the lower end of the ATR or the ribbon, the lower of the two, because I need to give this trade a little bit of room to breathe. And that is the second most common issue among new traders or traders that are trying to go from unsuccessful to somewhat successful to relatively successful to consistently successful, is that they don't give the trade enough room to breathe. So in this case, our close is at 546, our ATR is at 521, and our ribbon here is at 495, okay? So I don't want to be any more than 10%, and for ETFs, preferably 5%. But in this case, it meets the 10% rule, and if I use the ATR, it certainly meets the 5% rule as well. So this trade for me is a go. So I take this trade here on the 26th of June, and where do I take my profits? One of the easiest and simplest things you can do is go on your indicators And in fact, I already have it here. It's the pivot points. So these are pivot points that are automatically drawn in for you. So let's go to our entry here, June 26th. And we don't have the benefit of this one just yet. So we're going to use this one as our first target. So if we were to do this on replay, this would be here. Our target would be 557, which gets hit right around the 3rd of July. That's profit take number one. Next profit take comes in at 564. Okay, we do that. Once you take your first set of profits, your stop loss, regardless of where it is on the ribbon, it now moves to the ATR. And this is a very simple 3 ATR with a 22 period look back. If you get the chandelier exit on your charting platform, that these are all free indicators other than the ribbon here. These are all free indicators that you can put on your chart to make it look exactly the way I have mine. Once you hit that first profit level, my stop loss moves right to the ATR, okay? And you can see how well the ATR supports your trade. When you're in one of these sustained trends, that 3 ATR seems to work like magic. So if I take these pivot points off, you can see how many times we get closed. And remember that comment that I made earlier, we only want to be concerning ourselves with closes of these bars, not intraday moves. So you can see we go below the ATR, but never close below. Close above, close above, close above, in this case here. So we get this trade on June the 26th, and we're in this trade until this close here at 590, you call it 591 to be, it's 589 and change, we'll call it 590. What did you have to do here? What was your job? Your job was just to take profits along the way. The stock's job was to move up. The stock did what it's supposed to do. And even if you had not taken any profits along the way, you said, I'm just going to wait for a close below the ATR level, you would have gone from 546 to about 590 from June until October. And this is strictly mechanical. You're not making any adjustments along the way. You're just letting the ATR do its thing. You're letting the stock do its thing. And as Larry was pointing out in his last presentation, if you adjust the comments, maybe you wouldn't have done that well. But if you had a 550 call on the 26th of June, you'd be up probably multiple 100%. If you had an out of the money leap on this, you would have done really well. And that is exactly what we're doing here. We're not just buying the comments. In this case, this was rare. To buy comments, it was, like I said, a longer term bet on the overall US tech sector. But if you go and you look down the spreadsheet here, there's a call debit spread. There's a calendar. We did a buy right. We did a double spread. This was on Peloton. CDS, you can probably tell that I'm partial to the call debit spread to the long side here. And we make adjustments on this exactly the way I showed you. This is SoFi here. This is another SoFi take profit here, 131%, 189%. There's no one perfect option strategy for every situation. I do like debit spreads, and I'll tell you why I like debit spreads. Is that when I'm looking at something like this, and there's an entry that I see on the 26th of June, and we're around 550 or so. The reason I like debit spreads is the following. Let's say I get a 550, 600 call debit spread for December at that time. Okay? And it cost me, let's say it cost me $15. It's about a 3x return. I'm not just going to be happy, or I'm not saying, you know what, I'm happy with a 3x return. If I just bought a straight call, I know I could do really well. But I don't know when I get into the trade. So if I put on the replay, I don't know if my trade on QQQ, and if I take you back here, let's go. I don't know why I brought us to 2023. I don't know at this point whether it's going to go from 550 to 630 like that, or if I get in here at 625, that it's going to do this and then get back up to 625. So in options, speed is the factor that is most difficult to judge. Direction is easy, and we've had so many students over the past few years who got the direction right, just didn't get the speed right. Imagine that. Imagine you had the long on this position and you didn't make money along the way because your option expired before cashing in, or you didn't take profits along the way. And this is a very, very common mistake that a lot of new option traders make, is they get the direction right, but they don't get the speed right. They get the direction right, but they don't get the strategy right. And that's what we want to teach you. For me, I'm a bit of a fanatic when it comes to theta. I really hate decay. I really hate losing money while I'm waiting for the stock to do its thing, because it really doesn't care what I want. The market's going to do what the market's going to do. I just need to be in it long enough for it to do this. So just like we said that we're going to put our stop loss on the entry right around here, okay? Because we want to give the trade room to breathe. We're also going to set our option strategy so that we give the trade room to work, okay? If you had just a weekly expiry, by the time you get to this bar here on the 1st of July, you likely would be out of profit and you could be at a loss. But if you had a 90-day to expiry call, 90-day to expiry call debit spread, a leap, you'd be making good money along the way, especially if you had a leap and this happened. And then there was a recovery. Your short-term expiry is never going to recover. It's never going to recover. That's why people who sell options generally tend to make more money than people who buy options, because when you're selling options, the guy buying the options is not going to recover when this happens. Okay, but when you're selling options, this is going to crash the premium completely. There might be some recovery along the way, but you're likely going to make money if you've sold the option. And we, again, talk about that, when is the right place. But the one thing that we preach is defined risk. I never want to get into a situation where naked short, put or call, because I can't sleep well at night knowing that an overnight gap could really hurt me. And Vince does a great presentation on money management and how much of your account you should have at risk, etc., how much of the account that he generally likes to have at play. And it's a wonderful presentation. I'll show you how you can get a copy of that as well. So when you get this close that's below the ATR and you get this trend change, it's very clear, this is your time to get out. When you get back in, the indicator down here will tell you when to get back in. So when this goes from red to green, we know you're in a sustained uptrend. We're only looking for new longs. We're not looking for shorts just yet. The red indicator here, along with the ATR, will tell us when to get out, but we're not looking for new short positions here. Okay, so our re-entry comes on the 20th of October at 6:12. We make a decision on whether we can tolerate this loss down to 591. That's where we put our stop loss. And then off we go to 636, and we get a close at 611. So even if you had done nothing, this would be a break-even trade for you. If you had options, depending on the way you structured it, this would again be a break-even trade for you. Okay. Let's look at another one. Let's look at Bitcoin. Actually, let's look at IBIT, which is the proxy for Bitcoin. So most recent drawdown. So last entry on Bitcoin comes a little earlier than the entry on the NASDAQ. Last entry on Bitcoin was the 22nd of April. If you recall, our entry on the NASDAQ was the 9th of May. Do I take this entry? I make the same exact assessment as I did on the NASDAQ. If I'm aggressive, I take a half position here at 52, but I want to see a clearly defined previous pivot high above the ribbon. Okay, and that comes at this level right here. And the reason I'm passionate about breaking these previous pivot highs and lows for longs and shorts respectively is because they keep you out of a lot of the chop that can take place in these areas. Now, this is live charting. These are not photos. I'm not cherry picking any of these. If the group has anything that they'd like to look at, I'll do my best to get to them. But any symbol you can put out there. So there's the previous pivot high, clearly defined. Now, a lot of people would say this is the major previous pivot high. We can debate that. I'm not saying that can't be it, but I've got enough of a signal here that I want to now look for the most recent previous pivot high, which comes in at 56.48. And looky here, a gap up right above that 56.48. So we take our trade here at 57.62. Take profits along the way, get to a high of 63 pretty quickly. And as I mentioned, you can put this on a 5-minute chart. It'll work the same. It's certainly going to be more choppy. And you'll have to make adjustments a lot more quickly than you will on a daily chart. So we get to 63, and then we get this close below the ATR. So if you didn't take profits, this becomes a break-even trade. We get back in here. Have we broken a previous pivot high? We have not. So there's the pivot high there. So we stay out of a long re-entry there. Same thing here. I'm still only looking for longs when the ribbon is green. In this case here's our next re-entry. Do we take that? No. We want to see a break of this previous pivot high. And that entry now comes on the 9th of July. And from the 9th of July, 63.75, we get up to 69 pretty quickly. It's a 10% move on the commons, but could be 50, 60, 80, 100% on options, depending on how you structured them. And then let me take you to this area here. So when everyone was super bullish on Bitcoin, this is the time we had reached about 128,000 or so. You know what? Let's just put the BTC chart up. Probably has more data. So let's look at this most recent move here. So there's that short. And just because of that one rule that we didn't break a previous pivot low, which comes in around here, we would have stayed out of this trade. We would have stayed out of this long trade. Now, here's the interesting one. This short signal here clearly breaks this previous pivot low. Your entry here is at a close of 101,466. You give the trade a little bit of room to breathe. We've talked about this. This is not new. And then we have the rinse. And we get down to as low as 80,000. From November 4th, we hit the low on November 2021. If you caught this move down, kudos to you. We caught this move down. Again, it tests your patience a little bit, but wasn't really something that we were sweating. It didn't even get into the ribbon, let alone break the top of the ribbon here. And currently sitting at 92,000. So if you took profits along the way, you're sitting pretty. If you took profits close to the low, you're sitting even prettier. Okay. I've got 4 minutes left. Let me go back here and show you what we have. We have our TradingWins Elite service. It's a complete trading system for you for the remainder of this year and all of next year. And again, I preach this: consistency, clarity, and confidence. Consistency being the most important thing. We send out daily videos, Sunday to Thursday, that have trade ideas. exactly like the ones we mentioned on the spreadsheet. We have Monday, Wednesday, Friday live training sessions, both with me and Vince, and we talk about the two systems that we trade. He has Victory, I have Velocity. We've got 40 hours of training, okay? 40 hours of training. And if you go into your account here, you'll see everything from the basics, mindset, we've got technical analysis, and I can't believe we spelled technical wrong, but we've got technical analysis, trading strategies, and of course we've got, I feel like this is about 6 hours of training on options. And if you want more training, we can just send you more videos. We've got a vault that's got over 200 hours of training. So that's all available to you as well. You'll get all of that. No day trading, it's not for me. If you like it and if you're good at it and can tolerate it and it works with your risk tolerance, man, have at it. Good on you. I respect that. Rules-based entries and exit. That is what we're all about. We're a couple of math guys who dabble in psychology, conservative traders. If this resonates with you, this is for you. If you're looking to YOLO your money into BYND because it's up 20% one day, this may not be for you. I mean, there's a place for it. These are more lotto tickets. I'm not saying we don't do that. I'm just saying that's not our bread and butter. And most importantly, because of the way we've set up our company and we generally work with conservative traders, we want to make sure that our capital is protected first before we do anything. And a lot of our traders are actually either retired or semi-retired and want something that's methodical and that works with their risk tolerance. We've got a Cyber Week exclusive. You can try out the whole system, including access to the Velocity platform on TradingView, $7 for 30 days. It does renew at a higher price. It's $97. If you want to keep it, there's no obligation. You don't have to. Come and hang out with us for a month. You'll get the Velocity trial. You'll get a 2026 kickoff session invite. And Vince is releasing Victory 3.0, and you'll get a preview for that as well. TradingWins.com/festival as a nod to our friend Dave here, to whom I'm going to now pass back the mic. Dave, thank you very much. I really appreciate you, and thank you for the opportunity to be here.